Good morning. It's Saturday, May 10th, 2025. This is Robert Sin, and this is Goldfinger Capital. This is my May 2025 presentation for the Metals Investor Forum in Vancouver. This is a slightly longer version of the one I delivered on Friday. And it's the bull market adjustment trade setup. That's the title of the presentation. And it's a concept that I've come up with over the last few years, talking about to help to describe a specific kind of trade setup that can occur in the junior mining sector. It's a bull market adjustment trade, and we're going to learn about what that is and look at some really good examples from recent market history. As always, if you enjoy this content, if you get value from this video, please hit the like button, subscribe to my channel. You can follow me on X at CEO Technician, and you can follow me on CEO.ca at Goldfinger. So let's get right into it. What is the bull market adjustment trade setup? So we know what a bull market is, a bullish phase, rising prices in a market. It could be a sector, it could be the S&P 500, it could be the DAX, it could be a commodity, or it could just be a single stock, right? And so this particular presentation is about individual stocks in the junior mining sector, the bull market adjustment trade setup. So something occurs to ignite, to light the match for this trade setup to start to occur, and that's always a major event. There's some new development that brings heightened interest to the company. It could be drill results, it could be a new strategic shareholder, it could be the acquisition of a new project, a producing asset. We've seen a couple of examples of those in the last year in the gold mining sector, or it could be an economic study or new permits. But the key is that it's unexpected. The market wasn't pricing it in. The market wasn't anticipating this news, right? So it's unanticipated, surprising news, and it's clearly positive, surprising news. These trade setups become more powerful the more of these boxes, these bullet points that are checked in these specific stock setups. So under the radar, the more under the radar the stock is at the time of the event, the more torque it has to rise, the more new buying interest that can come in, and the larger the stock, the share price can move to the upside. Sort of along with under the radar is a tight share structure. So the tighter the trading float, the more torque the stock has to positive catalyst. So major new event, stock is under the radar, tight share structure, that's going to set up a very powerful upside move 98, 99% of the time. Okay, it really is that simple. On top of that, it's best when the stock has been basing, consolidating for an extended period of time. So maybe like it's been trading in a tight range for the last 6 months, it's under the radar, and then suddenly this news comes out and great drill result, or they receive a permit that was unexpected or was in doubt, boom, that's going to ignite the share price higher. And the broader the base, the bigger the consolidation, the bigger the base, the higher into space. Additional catalysts. So the new development is great, right? This major event has occurred, but markets are forward looking. So after 4, 5, 6 trading days, the market's going to pretty much 90% of the time going to price in this news, right? It does not going to price it in an hour or 4 hours. It might take a week, it might take 2 weeks, but the market will price in the news, and then speculators will start asking, what's next? What are the next catalysts? What other news flow is coming, right? So are they still drilling? Are there more drill results, assays pending? All these details, right? People are going to really start asking for additional catalysts. So the more additional catalysts the company can point to that investors can see, have visibility to, that's also going to keep the speculation high and usually going to continue to generate more upside in this bull market adjustment trade. And then big potential, right? So, a great drill result is wonderful, but if it's like one very limited pocket that's cut off to the to the north, to the east, to the west, and yeah, they added another 10,000 or 20,000 ounces to their deposit, but that's not big enough, right? That's not enough potential pie in the sky to really move the stock, right? So the bigger the potential, step out drilling, completely new target areas, right? Never been drilled, right? So words like never been drilled, um, or a project that's unexplored, okay, not even underexplored, unexplored. It's never been touched. It's never been drilled. That is the stuff that really generates the biggest torque. Grassroots, big potential, new target areas. So, for examples from the recent history: Hercules Silver 2023, Ramp Metals 2024, San Lorenzo Gold just this year, the last few months, and then Onyx Gold also here in 2025, the last few months. And then we'll talk about some ideas that I have at the end of the presentation. So, Hercules Metals, this was really a fantastic example of this bull market trade setup, and it really helped me to crystallize this concept. Obviously, I had seen similar trades play out over the last 10 years, but this one really helped me to crystallize the concept. And I think I pretty much named it the bull market adjustment trade shortly after watching Hercules at the end of 2023. So we know, I think everybody knows, that they announced this new discovery in Idaho in October 2023. Previously, this project had been known for silver, but previous operators had not drilled deep, right? They had stopped at 150 or 200 meters in pretty much every single hole. Nobody had pushed one down to 300 or 400 meters until Hercules came along, and they did, based upon what they were seeing in an IP survey, right? So the IP was showing something lurking at depth below the upper plate silver, and Hercules tested it. And this was literally the first hole that they pushed deep, and they tagged into 185 meters of 0.84% copper and a new porphyry discovery in Idaho, right? And this was really interesting because, yeah, the stock gapped higher, but it was only up 20% on the open on the day of this announcement. And you can see the candlestick it formed there on October 10th is what's called a spinning top. So actually, that candlestick is characteristic of indecision. The stock closed roughly where it opened, despite trading higher during the session. So there were sellers. There were a lot of sellers on that day, right? Millions and millions of shares traded on October 10th, 2023. And Hercules closed up about 20%, but well off its highs for the session. The next day it reopens, trades up at the open, and then the sellers come in again. And you can see this tail on this candlestick from October 11th, pushing it negative briefly, right? So literally the first day, plenty of selling, plenty of supply available. And then the second day, same thing, plenty of selling and supply available early in the session. Then some buyers really come in who've had the time to digest this news and really dig into it, and they drive it up and close it at session highs. And you can see what happens in the subsequent 6 to 7 weeks, where the stock goes from 25 cents before the announcement to 162, its peak in November, right? So what happened? Here's the drill result. That's the news release. And then Barrick Gold invests in Hercules, right? So literally a little less than 1 month later, one of the things that may have held Hercules back, somewhat in October was financing concern, right? The market could look at the company's financials and see it had roughly $2 million in its treasury. That's not a small amount of money, but when you have a new discovery, porphyry discovery, where you need to drill 500-600 meter holes, the market could do the math. They're going to need more money to keep drilling, right? So there was some anticipation of financing would be announced. Well, they didn't announce the financing in October. And then, boom, beginning of November, Barrick comes in and writes a $23.4 million check above market, right? So this is like nirvana for a junior mining company. They get a strategic investor, one of the biggest mining companies in the world, write a big check. They don't need to take in any money from retail. And the check is written at an above market price, so very favorable terms, right? And you can see that after this announcement, Hercules really shot above $1 and then just kept driving, right? I think this was the date of the announcement, that this gap and run move up to 162. But clearly there was some shorting that was going on here in late October. The short interest in the stock went way up, and on the Barrick announcement, those shorts got squeezed big time, and that really helped to supercharge the stock in its run to 162 in November. Ramp Metals, this is one of my favorites. Summer 2024, this company was looking for nickel and PGEs in Saskatchewan. It was super under the radar in June of 2024, beginning of June 2024. I knew the company existed. I knew they were drilling, but I didn't have any expectations whatsoever. I didn't own the stock, and I don't think anybody else owned the stock except for company management, quite frankly. And then suddenly they announced this drill result, June 17th, the Ranger target at the Rottenstone Southwest project, 73.55 grams per ton gold over 7.5 meters. That's a stunning interval. And, you can look through here. This is pretty consistent high grade gold mineralization here at Ranger. Yeah, stunning. Great drill result, right? So it was interesting because I remember the morning I read the news. Well, I knew the stock was going to gap up, but there wasn't much context to this news, right? Because they were looking for nickel. They were looking for nickel and PGEs. So what is this gold, right? So you had to talk to the company management. You had to dig in a little deeper to put context to the drill result. Those who did were rewarded because the stock definitely did run for 6 consecutive days up all the way up to 90 cents, right? So that's a hell of a move, right? From 15 cents to 90 cents in just a few days, less than a week, actually. But this one was a little different because the company had already demobilized the drill rig at the time of this announcement. They had just drilled 4 holes. 3 were drilled at what they call the Rogue target, and 1 was drilled at this Ranger target. And the one at Ranger was the one that delivered the new discovery, right? So the Rogue holes came out later. They didn't really report anything substantial, so the stock did pull back quite a bit. But that really gave a great entry for people who were able to appreciate the quality of this drill result, and that this is the Ranger target is really a grassroots target. It had never been drilled before, right? And so there needed to be some more field work done, some more geophysics done to really appreciate this Ranger target. So it was going to take some time during the off season to do that and prepare for phase 2. So you could bet that the stock would probably consolidate in a range, but definitely that pullback to 41 cents was a bit excessive, considering that this is a company with a very tight share structure with a potentially transformative new gold discovery in Saskatchewan. And then, so here's the drill result. And then here's Eric Sprott that comes in here, strategic investor. And that was what helped create this move up in July, right? His investment at what was at the time an above market price. And here's Ramp today, not fully updated chart, but close enough. The stock is above 140, and maybe this is bull market adjustment trade phase 2 for Ramp Metals, or maybe it's just a continuation of the original one, because frankly, Ramp never came back to even come close to that gap level at 25 or 30 cents from June 2024. It's continued to gently make a series of higher lows and higher highs. And then just recently, they announced a new VMS discovery at the Rush target, right? So there's Ranger, Rogue, and there's Rush. Rush is the one furthest to the north on the property, and some very interesting drill core. They, revealed some picks for massive sulfides. You can see the chalcopyrite shot through here at Rush. The drill is still turning. The last I checked, they were still drilling at Rush, and then they're going to move to Rogue and wrap up for this phase of drilling. They drilled 7 holes at Ranger 2. They showed some drill core from that, but assays are pending there as well. So definitely ramp is one to keep on your radar, but a really great example of a bull market adjustment trade from 2024. San Lorenzo Gold, SLG. This is from earlier this year. Another company way under the radar at the time of the discovery hole announcement in early March. You can see the stock trading from the end of 2024 and early 2025. I mean, this is a stock that during the peak of tax loss silly season at the end of last year traded 5.5 cents. 5.5 cents. Big insider ownership here. Also the case with Ramp. And they announced this new porphyry discovery, Cerro Blanco target at the Salvadora property in Chile, 153.5 meters of 1.04 grams per ton gold. And that created this gap higher, right? Now, this was a big gap. The stock went from 7 cents to 20 cents on that day, so almost 200% move higher. That's a lot, but when you consider how tight the shear structure was or is really at San Lorenzo, and the fact that this is a great location to drill a great porphyry intercept, and the potential of the target area, just the Cerro Blanco, but also the entire property, there was a good chance that it had further to run, and it did. And you can see that it went all the way to 45 cents at the peak there in March, but it has since pulled back because the company had more assays to report from other target areas, and the market figured these were not as good as Cerro Blanco. So we're gonna hit the bid, get out of this, and wait to see what's next. Very typical for junior mining when the expectations get raised, not necessarily by the company, but just by market speculation. And then the subsequent drill results don't match up to that higher expectations of the market, then you're going to get a sell-off. And that's what we've seen in San Lorenzo. But they're doing an IP survey the last I checked, and they will be mobilizing a rig back to Cerro Blanco in the near future. So this is definitely one to keep on your radar, because by no means is this bull market adjustment trade done. In fact, it just reset back to support, and maybe it's getting ready for its next phase. Onyx Gold. So this one is phenomenal. This is definitely not updated because just yesterday it closed at 109. Yeah, this presentation was made not too long ago, about a week ago. You can see the date. And in 1 week, it went up another 30% to 109. So Onyx Gold is a fantastic bull market adjustment trade setup with this gap higher on this drill result. So April 10th, 3.4 grams per ton gold over 69.6 meters at the Argus North Zone at the Munro Creases project near Timmins, Ontario. So it's 75 clicks east of Timmins. So it's not exactly in the Timmins camp, but it's damn close enough that this could be a premium valued asset due to a very attractive location near infrastructure and a large mining labor force. The news managed to help drive in a bunch of warrants. So the warrants came in, the company filled its treasury, $2 million in gross proceeds, right? And from that position of strength, because the company suddenly didn't need to raise money, remember Hercules, right? They were actually able to attract the financing on very favorable terms, $11 million above market at the time of the announcement. This was above market, and a strategic investor that smells like a large corporate. So a mining company taking 9% is what it looks like, right? So that helped to juice this above $1 in the last week. So the bull market adjustment trade is very much playing out. And Onyx has played this masterfully, right? Absolutely masterfully. They put the news out. They allowed the market to soak it in and marinate on it. Then the warrants started coming in a big way as the share price moved up. And then they were able to attract a strategic investor and a larger financing at a premium pricing, just as the drill was getting ready to mobilize. And I think the fact that they were able to give near-term visibility to the drill rig is going back to the Argus North Zone, that was very positive, and that created a sense of urgency, right? And so you need to be able to finance on favorable terms in the junior mining industry. You need to be able to inject the sizzle, right? The potential upside of a new discovery, the potential for what's more to be found, right? And then urgency. So we're mobilizing the rig next month, and those drill results will be coming. So now is the time to write a check and take a position in the company if you like it. And so Onyx has played this masterfully, really. And one of the things that investors should look for in these bull market adjustment trades is after the news comes out, a week, 2 weeks later, very often you'll see during the price appreciation, short interest rises, right? And we saw that in Hercules in October 2023. That rising short interest was due to speculation of an imminent financing, right? So there were shorts coming in, betting that the company was gonna raise money and they'd be able to cover into the financing. We just saw that recently with Onyx too. Not a huge, 600,000 shares is not massive, but it's large. It's considerably larger than the short interest was prior to the news, right? And both cases, a short squeeze ensued once they were able to announce a favorable, positive financing, right? And that in Hercules' case, it drove the stock above $1 to 162. Recall that big gap higher on the bearic news. And then in Onyx case, from 80 cents to 109, right? So that short interest can be fuel, can be upside fuel. So shorts are not necessarily a bad thing, and shorts aren't always the smart money. They get it wrong sometimes as well. And with these bull market adjustment trades, you're going to have these stocks are going to be really volatile. So just understand that it's not all sunshine and rainbows. Stocks can have 50% plus drawdowns in these trades because they are so speculative and people are betting on the come, so to speak, right? They're wagering on something that has imperfect set of information, right? The company itself has an imperfect set of information in all of these companies, right? So we're doing our best to gauge what the potential that the discovery is substantial, that it could be economic, it could be an economic, ore deposit, and how economic, how big could it be, right? These are all the questions that we're dealing with. So expect volatility in all of these, in short interest, and watch the the short interest. Questions to ask: what's the size of the potential prize? How much money does the company need to get closer to the prize? Expectations, always important to gauge market expectations. When they get wildly inflated, when they get way too high, way too optimistic, that's the time to take profits and sell. And also, as more data becomes available, what does it reveal? What's the story that the accumulation of evidence is telling us? Is it a one-hit wonder, or is it something much more than that, right? These are the questions that we need to wrestle with and try to answer for ourselves. Always ask what you could be missing. Always review the share structure, free trading dates of outstanding warrants and options. Who are the key shareholders? And what's their time frame? What's their objective, right? And then we always want to look to when's the next financing as well. Just be comfortable with how well the company is able to finance. And this is some data I put together on a dozen bull market adjustment trades over the last 7 years. And there's a lot of data here. Basically, I assume that we put $10,000 into each one of these on the day that the new discovery hole was announced. And then just different, outcomes. Sell at 3 months, or sell half at 3 months, sell half the shares at a double, and then keep half, keep all of it, and then of course just flipping out all of it for a 30% gain, right? And by far the worst outcome is just selling for a 30% gain, right? These were for the most part, at least 9 of them, very substantial new discoveries that were able to propel share prices much, much higher than the day of the major event, announcement. So selling for 30% gain was foolish to say the least. But notice that, like in a lot of these stocks, like Ramp, like Hercules, like San Lorenzo, selling pressure was quite substantial. I mean, even with Onyx, it didn't rocket up that high the first few days, right? It took a bit to get the momentum going, and obviously once investors became comfortable with the fact they had enough money, they weren't going to be pressed to finance on bad terms. The share price traded much, much better, and the offers were a lot thinner in that one, right? But the main takeaway from this is, for the best ones, the right move is to hang on through the volatility, through thick and thin, and you will be rewarded. And really, like a 40x like Great Bear, or even like a 7 or 8x like Philo, these make all the difference, right? Because the sector is so difficult, and the probabilities are not favorable for most of these companies, right? So we need those asymmetrically positive outcomes to make up for all the little losers, that occur along the way. We're not gonna um, always be smelling roses. We're going to be kissing a lot of frogs. In this sector, it is simply the nature of the beast, right? If it was easy, everybody would do it, and everybody would be Great Bear, but it's far from easy. So, final points: some stocks to keep on your radar for this summer. I'm actually going to expand upon this a little bit. So, Kingfisher Metals. This is in the Golden Triangle. So I put this sort of tagline, a little bit of promo there. Potential the size of KSM with the grade of Red Chris. I think if you could explain Kingfisher in one sentence, that would be it. Obviously, that would be the optimistic take on it. But look, let's be realistic. The potential for failure here is not small, right? This is sort of a daunting location. It is Golden Triangle, the Highway 37 project. A lot of these are going to be deep holes. It's going to cost a lot of money to drill these holes. And so, yeah, the potential for failure is substantial. But Kingfisher now has very strong financial backing. The financing that's open and underway, I think, will probably be oversubscribed. I'm not too worried about that. And actually, I think Kingfisher is a great candidate for a stock that people can buy like this month. Like, even though drilling is not going to start till the end of June, I think this is the stock where the sort of setup where you get some free trading stock here, and allows you to trade freely over the summer, right? So as drilling kicks off and news flow really gets underway, the potential here is that this stock could trade higher. I don't know how high. It might go to 40 cents. It could go to 50 cents. Certainly, if they drill a great intercept, it could go a lot higher than that. But let's not get too far ahead of ourselves. But Kingfisher is definitely one to keep on your radar. Rua Gold, this is in New Zealand. Company does a lot of marketing, very interesting marketing strategy, but generally I think it's good because New Zealand is kind of an under the radar, jurisdiction for gold mining. Yet it has a very rich gold endowment and rich gold mining history. I generally like what I see from this company. We need to see some drill results. There's assays pending right now as we speak. Drilling is ongoing at one of their targets there, I believe on the South Island. New Zealand has 2 islands, North Island and South Island. The South Island projects look more interesting to me, quite frankly. But let's see the assays, right? So continuing with American Eagle Gold, drilling set to commence in the next couple of weeks. I expect the news flow will begin to kick off this week, and this is definitely one to keep on your radar throughout the summer and for the rest of 2025. Here are the charts. Kingfisher in an uptrend, consolidating right now with the financing open. That financing will likely close this month with drilling to begin in June. Rua Gold drilling ongoing, and American Eagle has been consolidating for all of 2025 after announcing the last results from the 2024 program in January. Some key levels to watch here, definitely the 55-cent level is important resistance for American Eagle. The bull market adjustment trade. I hope you enjoyed this. For more of my content, check out my Substack, Goldfinger Capital, and please like and subscribe here on YouTube.